Welcome, everyone. This is Bob Kendall. I am attempting to use some software I haven't used before. This market's so crazy. I took a stab at the low here on the futures and bought a few contracts, and they're rallying off the low right now. But I want to talk, just kind of have a general talk. Hopefully, we'll get some people in on the live stream, and we'll be able to ask some questions and talk about some things. But there's the market conditions that we're seeing are just the most amazing thing I've ever seen in my life. Now, I'm talking to an old friend of mine over the weekend who has been around the markets about as long as I have, and he made a comment. He goes, "Man, I've never seen anything like this." And I'm like, "No one's ever seen anything like this because it's never existed before. We never did have the kind of visibility here on the screen that you're looking at. This is TradeStation running a layout that I have put together for my day trading. And anyway, take a stab. I actually got a couple of ticks off the low on this last trade, so I just thought I'd put some action up there and talk about things and see if anybody gets into asking some questions. And otherwise, I'll just sit here and rattle on because I want to try to use this software. So anyway, so we'll look at a couple of things. And in my daily broadcast yesterday, markets screamed back, closed wonderful. Didn't look like anybody cared about COVID-19, and now all of a sudden, it's all back into focus. And I saw John Najarian actually posted some interesting clips. I'll see if I can bring up my Twitter account because basically they're claiming a world pandemic over maybe, I'm not sure how many folks are sick on the planet, but like 25,000 out of 7.7 billion. Hey, Darmish. Hey, Greg. Um, yeah, so I really don't look at, Darmish just asked if there was if I had any comments on the tips. I, we'll take a look at the interest rates. I'll just kind of migrate around and just kind of look at some of the things that you guys are talking about. I'm glad and engaging. I just couldn't watch this thing. This morning's just been completely insane. I talked about yesterday. Just want to do a quick recap, and then I'll touch on some of these things you guys are asking. And there was a monster reversal on the charts yesterday. We closed literally at the highs of the session. We came in, market started to react to some news over COVID-19, and it just kind of got worse until now the World Health Organization. I don't know what you could compare them to, but they have like the credibility of I don't know. Take somebody that's not very credible. That's the World Health Organization. And so now they're calling it a pandemic, and since that came out, they've done something. So far we're bouncing here in the future. So, hey Darmish, is there a symbol you can send me? Put on the chat here, just so I can look at it. Yeah. So so let's take a look at a couple things here and just kind of unpack. This is the key chart here that I think is really going to be driving the markets. And this is the monthly graph. I've had this on several videos I've done. And this is a 40 period moving average. A 40 period moving average, way over in the left-hand side on the bottom, you'll see it's got a 0.50 number, which is a 0.5% per month. That is well over what I consider to be a trend level. And this number of that I was talking about at 2024 is real key. And we just bounced here. We're 42 now. I mean, on the futures, I'm just going to flash around, guys. So this is going to be kind of mad scientist mode. So, but if we go down and we take a look at, I literally grabbed these futures, two ticks at 2703.25. They were just a lot of times if they're punching into new lows, I'll just grab them here. So and so that trade is. I mean, look at this chart over here. It's just going vertical. Is the markets do not belong down here. That's all I can tell you. I'm in the camp. Maybe I'm just a non-believer in a lot of stuff, but I'm in the camp that all this stuff that's being fed to the public is bullshit, and that this is a way to crash the economy. I don't know. It's not political. If you hate Trump, you hate him. If you love him, you love him. But the bottom line is, it looks like they're just somebody's trying to crash the economy over virtually nothing. I saw a post that there's 136 children have died in this country this flu season from flu. I think it's type B. It's a real disease. It's actually really killing people, and not So anyway, I don't want to get too far off on that tangent. But going back over to this chart on the monthly, this number here, you bring up the data so you can see it. This data here shows that the 40-period moving average 27.21. So it was 27.24 yesterday. It recalculates. This is a real-time calculation. So since prices are lower today, the number's a little lower. But this is the number where this area is where the market should hold and bounce from. Now, the fact that I'm saying it should bounce from here does not mean anything. It doesn't mean this is the low of the lows. I believe there's something else that's going on. Okay, thanks, Dharmesh. Tip, right? We'll take a look at it here in a minute. But the bottom line is this is something that's really big is happening. Whether we've thrown ourselves into a recession, there's a shift in psychology. A couple of videos ago on my YouTube channel, I put out there that there's a change in psychology, and that psychology is significant. It's changing how people habits go, and storing food. And I was laughing talking to an advisor this morning, and I was looking at. I said, I'm not really buying into this thing. Meanwhile, I had a propane generator delivered to my front step about an hour before I said that. So it's kind of funny, just in case, right? So, they've done a really good job. The media's done a good job of creating this craziness. But this chart and everything that this is, when I'm talking about these PPMs, I developed this with an old client of mine, Professor Prater, back in 1980. I guess it was probably 83, 84 when we did the initial work. And what we did was we looked at these moving averages and we tried to figure out, why do markets come down to moving averages, and why do they bounce? Why do they hold? Why do they continue to go along those lines? So we did a lot of study around there. And what you see on the screen is these PPMs are the percent change of the moving average, not of the daily close, and then the first and second derivatives of those. So when they cross over, they tend to tell you that there is a trend changing. Now, all three of these that are on the screen right now have crossed over their first and second derivative. So there's a big change happening. This is a monthly chart. We're talking about secular trends here. We're talking about the big one, right? And I've been talking for the last couple of years, and kind of like the guy, the kid that yelled "woof," and I've been saying that we're coming into a monster generational top, and we may have finally gotten there. And what's happening is confidence, is psychology. People are starting to question just about everything anymore. For at least since Trump's been president, before, all we've heard about is fake news, and there is a lot of fake. People are just making up stuff. And so whether this coronavirus ends up to be something significant we have to deal with or not, right now it is an event that has to be paid attention to. And I did a call for advisors two Fridays ago. And I basically told everybody, I don't know what's comfortable, but sell something. This is weeks ago. If you're following our VPM methodology, we're in cash. So this doesn't mean anything to those people that follow that discipline. And, there's people that just don't, every time we've done this in the past, it rebounded and everything was fine. I was talking to someone this morning, and what we've seen happen, for instance, I'm not friendly to LPLA. I want you to look at this stock. This is Linsco, private ledger, right? LPL. Their stock is now at 58. It has dropped from 99 to 58. This is a disaster for this company. This is a disaster for anything they thought they were going to do financially, refinancing, expanding their business. All of that just disappeared instantly. It's done. And I've been waiting for this short in this thing for years, because I actually think it comes all the way back into $30, $20 on this. And it's just going to continue. I'm not going to go into a big rant on why I think that's happening. But these are the kind of events. So I just want to use these guys as an example corporately, because they have everybody's life's changed. From a corporate viewpoint, all the public companies. So many deals are tied to valuations of the stock. They can use their stock as currency as long as they stay over certain values. Certain other elements happen. There's so many deals that are structured around this kind of stuff. Somebody told me this morning that Boeing has got like a $16 billion or something, $6 billion, whatever the number, billion credit line. They're hitting the credit line just in case this whole thing rolls over and we end up in 2008 again. Because what I'm talking about here, I haven't talked at all, and I'll probably take this opportunity to talk about it now, and then I'll ultimately start to unpack this further. But at some stage, credit default swaps will come into play again, because these corporations, their balance sheets have all changed, and they've changed in a very short period of time. You're talking to an old guy that was actually trading in 1987, and on that Black Monday we were down 22% in one day, and I think it was from September 20th to I think it was October 17th was the Black Monday. There was I think it was 44% drop in 1 month. It was pretty brutal. At that point in time, there was a specific event that caused that, and it was also driven by the first phase of computerized trading. They called it program trading back in the day. And so, but this scenario, I just want to paint. Let's go back to the S&P here, and see we're trading up to 52 here now. But this is this is one of those events that is different, because nobody changed their habits in '87. I did a speech for International Chamber of Commerce in Mexico City in November of 1987. And I started off the speech by saying, I checked the calendar. It is not 1929. It is indeed 1987. And let me tell you why the economies, and we're not going into recession, why things are going to happen, because it was an isolated event that happened in the markets themselves, and they're nowhere near connected as we are today. Everybody's got a mouse on their desk. Everybody's a market maker now, and it didn't used to be like that. There were actually still market makers in those times. So the point I'm driving at is this type of drop has really affected a lot. So let me get to Dharmesh's question. Let's put Tip in there. So, all right, let me change this time period. Not a real pretty chart. I guess is the question, Dharmesh, if you want to try to catch the following knife. Yeah, I don't see anything here. There needs to be some stability in this before anything be any reason to do anything here. Any other questions, guys? I can keep rambling on. We're 15 minutes to the close here. Yeah, one of the things that I'm going to bring up gold, and I've talked about this on a daily broadcast, is that gold is, why isn't gold being a place, why isn't that being a safe haven? And it just, it's an asset. And what we're seeing here is it doesn't matter what the asset is. I'm going to bring up Bitcoin after we go through gold. But if it's some sort of asset that capital can be raised, that's what's happening right now. And there's been a fair amount of money flow into gold over the last couple of years. And we're just not seeing any of the, it's just a liquidation. There's no reason to buy gold. I've talked about this in detail. I'll draw in a pattern here that I think this is evident on a lot of different places that I've seen. And this pattern here, this is just a huge correctional phase. Chances are we'll come down to this 40-period moving average in here. And that's around maybe 1605 or so. So there's a lot of downside on the gold. So this is the interesting thing, and maybe this is the point. And Scott, yes, there will be a video tonight. I'm doing videos all through the week, and then on Sunday night. So Sunday through Thursday night, I'm doing videos. But this is kind of unique, is that because it's an asset sell-off, this is going to press every asset down to I guess, to their extreme and to their support levels. We've seen the S&Ps trading on the 40-month. This is the daily. If we go over to the next level and talk to, let's go to weekly, you'll see this pattern. It's a really crazy pattern because this volatility has been affecting gold from everybody being on board. We've got this massive noise, and I call this pattern is really a noise pattern from the standpoint of there's absolutely trendless. But if you look at the PPMs, which are telling us what's going on with the trend is failing. It's starting that beginning phases of failing. So the point is, people always ask, what can I buy in a situation like this? And most of those folks that have followed my work for a long time, I've been writing daily commentary. I started in 1985. So I've been around the street. I won't give you my resume, but the bottom line is this type of event is going to continue to be under pressure, and I don't know where it ends. I thought we had a shot at a consolidation, maybe some recovery in the stock market. Where are we at now? We're back at what, 41. So the point of all this is that this is going to be, if we're lucky, this thing holds a 40-month moving average on equities, and all of these, like this 10-week moving average, that's the downside. 1600 is 1599 right now. So you're looking at gold coming down, to the low 1600s. I'm just going to throw some stuff up here. Bitcoin has been under pressure. It was doing wonderful, and all of a sudden it got derailed. And everything, this goes to the pattern, everything that's out there continues to be in this type of pattern. Let's go to the 10-year. Let's look at this. And this is the one market. I really think that from the standpoint, we're seeing crude oil back under pressure again. But when you look at the daily chart here, this thing is going right up to fill these gaps. I talked about this. The 10-year being down at 0.4 something was ridiculous. And I still am not a believer in the zero interest rates. I think this is going to set up a low here. You can see a pattern etch out. And I think this will coincide with the pattern of the equity markets holding the current levels. We'll see how we close today. We still got 2 more days this week. There is no economic news. No one's even looking at economic news. Look at the employment numbers we had last week. No one cares, right? So the bottom line is this is going to be emotionally driven by the news, and the machines are going to be running this. Let's see. Yeah, so Amit, I don't think this is a place you want to buy. So I want to. This kind of triggers a. Yeah, Greg. No, it's not an out. It's not a. It is a reversal down, but in these kind of patterns with major support, you're likely to see this hold. So we could see a reverse of the reverse tomorrow. It could be a one-off situation. And with only 10 minutes to go, that's why I wanted to light up the screens. But one of the things that I think is really going to happen, I think I've talked to, I know Greg, you and I've talked about this the other day, but I really believe that the scenario going forward is it's going to be very difficult for people to make money trying to do what they've done over the last 10 or 11 years, which is buy some ETFs, put them in a pie chart and hold them and see how it plays out. And the reality is, I don't think there's going to be any sustainable trends for a while. And I have a scenario which I won't put out at the moment. I plan on doing a show just on that, but I do believe that the only way going forward will be doing individual securities. And I know a couple, I see some of the names that have asked questions anyway. I've seen, I know what they've done with the VPN process and Portfolio Expert. I just think that you're going to have to continue to be focused in on individual symbols. So let's go back to let's watch some other. Yeah, that's a good question, Scott. How do I think that the ExxonMobil dividend will cut? Yeah, that's a possibility. Let's bring up crude oil real quick, though. Crude has the same pattern. I talked about this in the video last night. Is these gaps up here need to be filled, and they will be filled. So I still think crude will rebound. I think this is the machine. So the machines, when we talk about the machines, there's a lot of processes out there that are actually utilizing keywords and searches on news, and it's driving buys and sells. And these algorithms are keying off of news and different influencer sites and all kinds of different things. I had a buddy that was running an offshore hedge fund that was doing these kind of things, and this was something they were doing maybe 4 or 5 years ago, and it's developed much further. So all of the negative things around coronavirus is driving this thing. So the bottom line is that what we're seeing here, this asset will recover. And I saw something. I think it might have been Russia. The days are blending together. There's so much news flow. I did see that Russia's talking about or maybe it's Saudi Arabia. They're just going to keep cranking their production. They don't care where the price goes. And part of this is like, I'm going to say this. So this is sort of like this is World War III to a point where it's attacking. The U.S. has been so successful in the last several years with the economy expanding, becoming energy independent, and we're not dependent on very many people. And after this event, I'd be shocked that all kinds of manufacturing companies don't start building here, and they realize the risk now of outsourcing offshore. It was back in the old days, it was call centers to India and the Philippines and other places. Now it's been, in the last 20 years, all of our manufacturing's been outsourced, and mostly to China. And so, I just think this is kind of, this is a war we're seeing here going on. I think China this disease came out of Wuhan, possibly it was created by man, and they let it grow to a point. I saw a report where they protected the police and the military from this stuff so they can implement martial law. And why does Iran have so many cases? Because China does shitload of business with Iran. Big time. Lots of people travel. Chinese travel all over the world. There's a lot of business going on. There's lots of travel. So it was almost like a weapon. It's back in the days of the American Indian War, or one of them where they used supposedly the scarlet fever blankets that they passed around to the Indians. But I'm getting a little too crazy here. But the bottom line is there appears to be something going on, and the news is taking it further to create this panic. And like I said, these algorithms are keying off of that. We got 5 minutes to go. Let's stay focused on this trade. So my trade's doing pretty good. I'm going to let it go right after the close. But the bottom line is this market's recovered off of that magic number we're looking at, 2720. It's not far off of it. We'll see how things go in the next few minutes. And this is the other thing. This chart that we're watching right now, they've traded, they've been doing about the same volume every day, about 3 million contracts a day. We're at 2.611 right now. And this has been pretty consistent. Overnight, this is machine driven. These machines are staying on all night. Not 24/7, but 24/5 right now. And they start on Sunday. And that's why you see this erratic trading on the left. You can see just how fast these trades are moving. And you also notice the numbers are very small, 3 and 17. These are typically, you can add a 1 to those, and it's not, usually there's 300 by 500, and it trades back and forth in 25, 50-cent increments. You can't even quote this thing. We just moved 250 points in 5 seconds. So there's no way to quote this thing anymore. And interesting enough, it's sort of easy to put a trade in. And I know I got multiple contracts. I'm gonna just put a trade in here. I'm gonna put 5 in. It'll take me out. If not, I'll have a stop in just below this thing. But I want to start.
Order filled.
Yeah, it just got filled. So now I'm a little bit underwater on my last trades. Oh, that's interesting. I didn't have very much on. I actually ended up short. So
Order filled.
I'm going to take that out. So now I'm out of the market. But the bottom line is you can get things filled, but they got to trade through you. And it's, I don't know, this whole thing is fascinating to me. But you'll see on this center where you see the time and sales, every once in a while you'll see above the ask and below the ask. Oh, I don't know if I can freeze it maybe for a second there. But and what those are is the machines are, this is the order book. What you're seeing on the left-hand side is the order book. And it shows you all the contracts that are offered and everywhere. It's like a level 2 view. And the time and sales, it's showing you what's happening from the order book. And this other number here where it says volume, this is how many contracts traded at a price. So they're trading a fair amount of contracts. They're not showing a lot, but the machines are filling things above and below these bids. And I can tell you, if this was, we could turn the clock back 5 weeks ago and I had you on a live stream like this, it would absolutely, you wouldn't see any of these above or below the bids. I think I can put the SPY up here real quick. What time is it? Yeah, we got a couple of minutes. This is interesting because what you're going to see on time and sales, you see a lot of these burst baskets trades. But you'll see, I don't know if I can't freeze this, I don't think. No, I have no way of stopping it. But you'll see things that'll flash by and it'll say out of sequence. It's the same type of thing. And if you watch the values on the SPY, they're random in a range. And the other thing over on the right-hand screen, I'll just talk about this. This is the final minute of trade. In fact, I want to go back to the futures as fast as I can here. This will be interesting. I didn't realize we were that close. Of course, it's going to freeze up because I tried to do it. Here it is. Okay. Yeah, we're still waiting. Okay, there's the data. So you'll see this is the final few seconds of trade, and we traded down to the 39 level. So no big bounce here at the end of the day. But we did hold, even though we went through that numbers. I think it was Scott asked about the number, that 27, 24 number. It went through it, but we were managing to stay above it. So once again, this is all going to be news driven overnight, and you're not going to be able to. That's the close there. Just got the final. But that, so any other questions? I'm glad to talk about a few charts. We'll spend a few more minutes if anybody's got any questions. What are the buy levels on Boeing? My gosh. My brother and I were talking about Boeing. We think they should just get a metal grinder for the 737 Maxes, start over. This is another one of those crazy stocks. Typically, and I actually put on a video, and I'm working on some stuff, trying to get some things. We have in our software, we actually have, we run 17,000, I don't know, roughly 500 different symbols. And in the system, and we're going to start at some stage, we're going to start generating some buy signals. They've been pretty light, and I want to find a way to distribute some of that information, actually even out to non-subscribers for our software, just to be able to give you a view of that the market's turning, and hopefully that can give you some guidance on just the stats is what I want to do. And ultimately I'm working on some things as well. And let's see how many still on. There's still 15. And I'm in the process, and haven't got it quite done, but we're really close. There's a new company out there called Ticker Talker. I'm going to give them a shout out. I am going to be selling these indicators. You see this setup that you're looking at on the screen right now. I am going to be selling these indicators on their platform, and they're an interesting platform because they allow you to trade with multiple broker dealers, so they're broker dealer agnostic. You can actually route your orders right from their system to your broker dealer. They've been around for a little bit. They're getting ready to do a lot of. I know they're getting ready to do a lot of TV advertising. I know they're going to be selling my indicators and stuff like that. And ultimately, I'll probably do some training videos and things like that on there. But it's something to watch out for. So those of you that are subscribing to the site, to the my channel, I'll make sure that you know about those things as they come out. And on the advisor side, we actually have some new software coming out and some other things. So got to do a little bit of an advertisement, I guess. But it looks like markets finished at 27.41. Pretty much reversal, as Greg pointed out. We did not punch out a new high. In fact, we never came to it. Let's bring that up just to kind of look at things there really quick. Is that what you can see here? This was the reversal right here. Let me put a tool up so I can draw on here. So this bar right here was yesterday's reversal. We made an outside bar on this bar here. And today, obviously, we opened up and we closed lower. We made a new low off of these lows. And that's all significant. But I still think this is part of a larger scenario. You'll see that down below here, the PPMs, PPM 1 is starting to diverge a little bit. You got confirmation 2 and 3, they made new lows. So, but each one of these indicators represent I talked about this earlier when I started talking, this 10-period moving average, This is the rate of change of that 10-period moving average and the first and second derivative. So we actually crossed the derivative yesterday. That's why I started screaming about this reversal. But it's the video I did last night, it was critical. There were two things that had to happen. Is one, we needed to make a new high from yesterday. We did not do that, fail. And we needed to close higher. So we needed to close above 2,900. There had to be follow through. So none of that happened. So we're back to what I talked about a little bit ago is that monthly chart is really what's going to continue to drive at least what's going on in the markets. And just real quick comment by the folks that are on there. Is everything? I've never used this software before, so does it sound good? Everything look good, crisp, all that? Just want to know, make sure it's of reasonable quality. Anything else? Any other markets we want to talk about? I put up Japanese yen. This is another safe haven trade, and this thing pulled back a lot, but there was a lot of money running into the yen. That's another one of the safe haven trades that people look at. So we talked about gold. We talked about crude oil. Crude is actually trying to come back a little bit here. What else? We could bring up a couple individual stocks if you folks want. This is the other thing. We saw a huge volume yesterday on the big reversal. It was monster volume. We didn't get as big today. We got 7.8 billion shares, 7.6 billion traded today. Yesterday it was 8.6, I think. Maybe it was closer to 9. So if you look at the last... there's a couple things. I'm going to try to find a chart real quick since we still have some participation here. I'm going to try to find something very quickly here. And this is one of the things that we're seeing these type of actions, and bear with me. Yeah, here. So I'll bring this over on screen for you. Not what I wanted. Here we go. So this here is a graph of daily volatility, S&P 500, going back to 2006. And you can see we're getting a lot of these reds. And what typically happens is that these things get the big days and yesterday up over 1,000, today down, over 1,000. These big days actually get concentrated around these market events. And you can go back, here was at 2015. This was 2018 right here. So, and then we, of course, go back 08 and 09. There was all kinds of this stuff was going on and lasted for a while. And so this volatility is likely to continue for a while until the key is going to be when these charts start to see some liquidity, then we'll finally start to stabilize. Until there's some liquidity, nothing good is going to happen other than lots of volatility and massive swings. And I think every day, every week we go by right now, we're going to lose more and more confidence in what's going on. So that's probably about it. Let's see if there's any lower expenses, minors. No, Jake, okay. Yeah. Hey, Darmish, if you haven't taken off, give me a ring, man. I'd like to catch up. All right. So, yeah, Jake, I'd see what you're saying. Uh, Jake's the master in in mining stocks. Um, yeah. So miners are interesting because I used to run a small unit that we did a lot of hedging with miners, and they're I guess it comes down like anything, and they're more sensitive to some of these financing issues that I talked about earlier. Is that all of these companies have been literally blown up from the standpoint of what financing is available to them, and what kind of deals they had marked to market capitalization on their stocks. I can't remember the exact deal, but Tesla had some deal where they had to be over a certain amount of money. Even that was a deal for uh, Elon Musk to execute some of his options or something, but it was tied to a capitalization. And the reality is that there's a lot of companies out there that are tied to that, and you know, you'd be better off. Jake, you'd be better off. I wish I had you on a call. I'd love to hear your thoughts on this stuff. You're asking me. I can tell you from a technical viewpoint, but from fundamentals, it's not something I have a lot of in depth about. And there's something else that I'm going to attempt to bring up here. And we didn't talk about this. Let's see here. I'll bring it on the screen here. Everybody's seen this thing. This is the other issue that's going to come into play. Is the U.S. debt clock. This is very, very big. So if federal income tax revenue starts to decline, these numbers are just going to go exponential. And it's not any, yeah, there's no way to escape from this. So I've talked about in some of my daily videos that I've done, I've talked about the Iran, when the mini Iran crisis happened and oil spiked up. When oil spiked up, it put the focus on oil, and everybody realized that oil's so abundant that it wasn't worth buying, and it turned around and it exposed what the real issue with oil was, which is it's everywhere right now. And it's the same thing now, what we're seeing on the screens and the things that I'm talking about with these financial companies, what they have going for them is, with all their capitalization getting whacked, it's putting stressors, it's changing deals, it's canceling deals, it's doing all of that stuff. And this is the same thing here with the U.S. debt clock. You're looking at, this could just accelerate the debt, and everything just spin out of control very easily. And there isn't probably anybody that's watching this video right now that hasn't talked or thought about this. And I've said for years, what's the number? Is it, I remember when we were under 20 trillion. Is it 20, 21, 22, 23? And I guess I'm going with 23.5. This is the point where all of the weaknesses, all the stuff that is a real issues get exposed when the meters on the market stop going up. People start looking around and seeing what's really wrong. Is there something else that's happening? Is it really the coronavirus, or now is it focused on everything else that's being exposed here? And this is certainly one of those things that is out there for sure. There's no way to ignore this. This is the elephant in the room. And you look at what federal spending, 4.5 trillion. Federal income tax 3.5, upside down 1.3. And now they're talking about spending billions and billions of dollars to try to stimulate the economy, because we entered this world back in 2008 and 9 where the Federal Reserve, racked up their balance sheet to 4 trillion from 800 billion, I'm sorry. And then, they took it to these monster numbers. Well, now they're going to spend money to save us, because it's impossible to run a capitalist system like the old days where we'd actually have recessions and things would get taken out that were excessive. Now it's keep the excesses on, pump the money, don't let anybody's life change, don't want to offend, you don't want to cause any pain. How do we avert pain? And that's why things like the Green New Deal and those kind of things that it's describing some kind of utopia, but there's no money. So I guess if you have a printing press and a legislature, you can change the laws and make anything happen. But in the end, nothing's worth anything. And so, this is all an engineering effort to be able to keep everybody happy. And so I'm not sure where we end up, folks. So let me go back to bring that over there. I did have a view. I could see the chat room, but now I don't see that. There it is. Yeah, so Jake says I thought the 200 BB and overnight ROOP operation was enough. Yeah. Who knows what's going to come out of this? So there's no way to keep this thing sane, okay? And everything's going to be reactionary right now. Everybody's going to respond to whatever the news stories are, the algorithms, all that stuff is going to continue. Let's see what. Okay, so they've shut the machines off right now because they got I think it reopens in about an hour and 15 minutes. So they've shut it off, and we pretty much went sideways from the point we went. So anyway, folks, I appreciate you taking the time. This was a random thought. I had a brand new piece of software. I figured out how to use it, so I thought I'd put it up, and hopefully this was helpful to you. And I will be doing a video in just a few hours from now. Probably depends on when I get them done. They usually get done between 8 and 10 o'clock Mountain or Pacific time is usually when I get done. So I'm on West Coast time. So anyway, folks, thanks for watching. I appreciate it.